Welcome back to the channel, everybody. We've got to talk about this crisis happening right now in the United States. $100 billion emergency loan usage highlights crypto scrutiny. So how does all of this make sense? And how does this emergency loan usage impact crypto and what's happened here this past week? Speaking of what's happened here this past week, didn't even know I had my sunglasses on my head. There we go. It's been a crazy ride, right? I'm glad it's Friday. I'm glad we're heading into the weekend where we can just take a step back and take a breath and hopefully move on from all of this craziness that has happened here in the past 5-6 days. But this is interesting. I just came across this article this morning and wanted to share it with you, wanted to break it down. So again, welcome back to the channel, everybody. Appreciate you guys so much. And if you have yet to subscribe, we're talking about crypto, we're talking about the financial markets, we're talking about the feds, and I'm going to actually start talking more and more about the stock market too in general and how it relates to crypto, basically all things investing. I'm trying to branch out a little bit. This will still be a heavy crypto channel, but something like this, right? It's more macro. We're going to be talking about all those sort of things too, so make sure you guys subscribe down below. Now, recent data shows that the Federal Reserve's Bank Term Funding Program, or BTFP, has reached a milestone of $100 billion in usage, indicating continued financial assistance to banks and highlighting the persistent nature of the U.S. banking crisis. We have seen tons of banks go under here this year, and the program itself has consistently experienced high utilization for 5 consecutive weeks, reinforcing its significance in providing vital support to financial institutions. We've seen the bailouts happen, and this says here from Nick Tamaros, 5th consecutive week, Fed lending to banks through the Bank Term Funding Program has edged up to a new high, hitting $100 billion as of Wednesday. That was yesterday. Now, this was launched this year. The BTFP was designed to provide eligibility depository institutions with additional funding. The program's primary objective is to ensure that banks possess the necessary resources to meet the demands of all their depositors, effectively functioning as a form of banking bailout. This is basically protection for the banks at the highest level, okay? You're essentially allowing banks to mitigate the impact of devalued assets. Through confidential transactions, the program seeks to enhance the stability and liquidity of the banking system, basically prop it up whenever it needs propped it up. Now, we saw the recent crackdown this week with Binance and Coinbase. This was seen as a likely attempt to curb the growth of the crypto industry in the United States. They don't want retail money in crypto. They want to scare everybody out. This has raised concerns about whether it is connected to high utilization of emergency loans now. These crackdowns on crypto have sparked mixed reactions. Some people believe that the crackdowns are necessary to protect investors from fraud, while others are a little bit different. Also, to prevent the use of crypto for illegal activities. But we both know there are more illegal activities that go on with cash. Yes, there's an element to crypto, right? I get that, right? And it's easy to transfer money across borders, but there's also a lot of benefit in that, right? It's like saying the internet's only bad because there's some bad actors and social media, ruins people's face-to-face interactions without focusing on the good, the fact that it's bringing all these people together and global economy and creating businesses. We hear this kind of pessimistic viewpoint a lot with new technologies. Same thing's happening here with crypto, and it's on purpose. Others believe that crackdowns are excessive and will stifle innovation in the crypto industry. The underlying reason for the continuous scrutiny remains unclear, but it is worth noting that security regulators have viewed cryptos as potential threat to traditional financial institutions. Now, if we go over here, I've retweeted this not too long ago. Let me scroll on down. This is what we have right now, okay? And let me move myself over here for a second, okay? And you can see here basically what's happened here. So you could see BNB, XRP, Cardano, Solana, Polygon, Tron, Binance USD, Avalanche, Cosmos. These all have been declared securities by the SEC just basically in the past week. I mean, I guess, XRP has kind of been there for a while, but that is what's happening right now. And, everybody is under attack, and it's frustrating to say the least. So hopefully we get on the other side of it, but this is a really interesting angle. The fact that this $100 billion emergency loan usage now highlighting crypto scrutiny, it kind of all is happening at once, and I think it's by design. What do you guys think? Let me know down below in the comment section. By the way, long term here, we're going to be fine. I'm still bullish on crypto, as bullish as you can be. When we really, zoom out here and understand what's going on, the only reason this is happening is because crypto's for real now. Crypto is not going away. It's not just a flash in the pan. And that's why all of the scrutiny is happening. That's why all of the crackdowns are happening, because this market's real. This asset class is real. Don't let them fool you. Appreciate you guys. As always, don't forget to subscribe. We'll see you. Bye.